Dipan Mehta, the director at Elixir Equities, has been waiting by patiently. Dipan, thank you so much for waiting. We had that chat with the TCS management and you heard them out, I'm sure. They're not giving any visibility on demand going forward, but they're also saying that there are no client cancellations expected in the next 2 quarters. There's no differential spending from clients, and their deal win guidance, margin guidance is intact. Would that enthuse you? Because the stock has fallen quite a bit this year. Is it a time to re-enter into IT stocks like TCS?
Good morning, Sonia. Thanks for having me on your show. I would just little wait and watch at this point of time because the global environment is just getting murkier and murkier, and where all this is going to end is very difficult to say. And it's not that these stocks are really at very, very attractive valuations. You may have a bounce today, but I'm not convinced that next 3-4 quarters are going to be exceptionally good for TCS. So I would just like to wait and watch. At the same time, I think there are many good opportunities elsewhere in the non-IT space. Could be banking, auto, consumption-oriented stocks. So from a portfolio perspective, I think it's better to be overweight some of the domestic-oriented sectors than software companies at this point of time.
Look at the pre-open rates. This is how things are settling down into the 7th minute of the pre-open and 15 points higher. So this is, will we open actually in the green? We'll see, because in the last hour or so, yields have moved up. US futures are down a little bit more. Markets like Hang Seng are down another 4% after yesterday's 4% fall. But here, there is that outperformance which shows up. I was talking about day on day, week on week. You can probably add hour on hour, shorter time frames as well. Quite something. But I'm not very sure if that's the opening we will get. Eventually, like yesterday, you will get that impulse to buy is very strong, of course. Dipan, your point is taken on IT, so still cautious. But do you think incremental earnings downgrades may kind of halt a little bit here? Give some breathing space because of what we've heard from companies, and things may surely get worse before they get better. But will the market wait to see that happen before downgrading earnings now? Your sense?
See, I think more or less the downgrades have got priced in, and I don't expect further downgrades, at least not after what TCS has to say. And I'm sure the other large IT companies also would have similar commentary. That's not the issue. The issue is growth going forward. You want to buy companies which are growing at 15% plus consistently next 2-3 years or so. And that particular formula is not fitting into large cap IT at this point of time. Although we're very positive on select mid-cap IT companies which are focused on very specific verticals or have IP-related businesses, those are in a way a different zone and they can continue to grow at 15-20% or so. But large-cap IT, because of its base, because it is certainly affected by the demand environment, I would say that for them to grow at double-digit earnings per share for next 3-4 quarters looks a bit difficult. So that's the reason why we want to be a bit cautious and underweight, especially on large cap IT. But if you want to have allocation, the best is to go for some of the mid cap IT companies which have a slightly differentiated business model and are focused on very unique verticals.
All right, Dipan, I wanted to ask you about India Cement. So we'll just run our viewers through what's the news piece that came in overnight. Well, Nimesh had alerted us that it was likely to be a deal. And yes, that's precisely what's happening. JSW Cement, they've completed the acquisition of Springware Mining Private Limited. Remember, that's owned by India Cements. It's a subsidiary of theirs. And they have limestone block in Panna district. That's in Madhya Pradesh. For this, the total amount they'll be paying is around 477 crores. But various brokerages like Motilal, they are saying that they'll also receive an additional 127 crores, which is the principal plus the interest that was lent by India Cements to this particular subsidiary. So the total deal value works out to around 600 crores. The impact would be that the debt is around 3,100 crores. If they use all of this to reduce it, debt comes down by around 20%. The promoter intent as well is positive. And now the street will wait by what are they doing with the Rajasthan plant that they have. That's around 1.5 million tons on. But both the brokerages, that's Motilal as well as Nuvama, both of them say that valuation-wise, well, the stock is looking fairly expensive at around 13 to around 15 times. However, bigger deleveraging from here on, that's something that the street will like. Well, Dipan, in pre-open, the stock, in fact, is opening with a cut of around 1%. So clearly the street, they wanted a higher valuation maybe for this. Some reports indicated it could be close to around 800 crores. How do you approach the stock? Valuation-wise, it trades around $85-90 per ton. That's EV per ton. And EV upon EBITDA, 13 to around 15 times. Your view?
No, we are generally negative on cement stocks at this point of time, India Cement included, and all rallies could use to lighten up positions over there. The reason being that there's going to be a disruption within the sector, and the way the capacity is going to come up, eventually there'll be pricing pressure as well. And this entire discipline which was there as far as capacity and cement pricing was concerned, that may get vitiated. So I would be a bit cautious. This quarter numbers also not going to be that great. So I would like to avoid cement. Let's just wait and watch and see how the industry actually evolves post the acquisition of ACC and Ambuja by Adani and the kind of massive expansion plans announced by all the large players in the sector.
Okay. I know you did mention that on TCS particularly, you would sort of wait and watch because you're not too enthused by the global situation. But on Infosys, I wanted your thoughts because there's the buyback proposal as well. Earnings are coming up. Ahead of the earnings, would you buy or caution even there?
I think it's always better from a long-term investor's perspective to wait and see what the management has to say and then perhaps take a more informed decision. But yes, there could be a trading rally today just before the results are announced. But generally, I think that's what it is, a trading rally. You cannot make an investment decision on the expectation that the numbers will be exceptional and there'll be a buyback announcement which may be positive. If you have a long-term view, it's better to just understand and what the company has to say and then take a decision.
Just a couple of names throwing your way, Dipan. One is Axis Bank. Generally, a lot of chatter, a lot of optimism around this one. Maybe a momentum-related move on the upside. On the downside, we saw that big move in India, the big cut on Indiabulls housing. Recovered into close, though, down 6%. There was Varun Beverages and Lemon Tree, which sold off 5-6% as well. And any thoughts here?
Very positive on Axis Bank, and the numbers will support our positive view on the stock and the banking sector as a whole. Indiabulls housing is certainly an avoid. We like to be in the stronger banks and NBFCs. The smaller ones, they are very susceptible to a lot of risk factors when the sector entirely goes into a bit of a tailspin, as we saw during the ILFS crisis. Very positive on Varun Beverages, I think, entering into a new growth phase, and the capacities and the acquisition which they have done over the past 2-3 years will start to play out very well in terms of higher growth rates. And I forgot the last company that you asked on was?
Lemon Tree. The hotel company, Lemon Tree, Dipan.
Yeah, I'd rather buy Indian hotels at this point of time than Lemon Tree, but nonetheless, I think prospects of both companies and the hotel industry as a whole is pretty interesting. And certainly next 2-3 years, you could see these stocks come back into reckoning and find their way into many portfolios.
All right, fair enough. You know, this is going to be quite interesting if we get this kind of open, 15 points higher and about 15 points on the Nifty. And actually, the positive start essentially is what is going to be an interesting one. Dipan, you know, the IDFC twins, again, the IDFC Limited is at about 72. IDFC First, of course, is making its own move. Is there upside here?
Yes, I think usual disclosure, we and our clients are invested. We are very positive on IDFC First, and after the large cap private sector banks, IDFC First would be the top pick as far as mid cap banks are concerned. I think they've handled the entire COVID and also the integration with IDFC really well. And the way they have grown the credit book as well as the CASA book, I think is very impressive. Strong dynamic management, very strong technology platform as